I don't think. What's up, Turkey? How you doing, Andrew? As usual, welcome back. Amazing week. We're on some kind of killer streak. Um, Sorry, I just have an order to sell some of these SPX calls. So as you guys know, I flipped long at the close there. Reason being is I have a very important support here at 39.30 on SPX. Wait, Turkey, is it not working? Can you guys hear me? Hello? God damn it, YouTube. No wonder. God damn it. All right, so here we go. All right, so Turkey confused me a little bit. Sorry, guys. I was just putting in an order to sell some of those SPX calls for 4 here. Quick 20% right away. Um, let's see if I get filled. But yeah, so amazing day, amazing week. We just been crushing it all. And the reason I flipped long at the close was I'll go over that in a bit on SPX, but I do have an important resist support line here at 39.30. I gave it to you guys in the morning. It was the absolute last level on the key levels I gave you in the morning. So that's why I covered my JPM puts for 25%. I took a little 10% hit on the McDonald's puts. I don't really care. We bounced hard off the 50-day moving average. We'll go over that as well. Other than that, great day. CPI number, even the cooked number came in hot. So that should tell you something about where real inflation is. Other than that, let's see what happens tomorrow. I don't know where we go from here, honestly. We are underneath 4,000 on SPX, which is negative gamma builds. The longer we stay underneath here, the more weakness we'll see. You guys seen the bulls try to rally today at least 2 or 3 times, and none of them went anywhere. There were 10-15 minute bounces and we went right back down. So here's SPY. We did close near the low of the day. That's going to make an ugly daily candle. As you guys see here, it's almost an inverted hammer. Sometimes in the past these have signaled reversals, but this honestly it's a very bearish candle. We are going back to levels that we haven't seen since March of 2021 now. Let's see, we have some support down here around 384, which is another 8 points down. We might get down there till May 20th, who knows. And let's see where we go from here. Right now, the daily looks like a big toppy pattern, so I'm not really too excited. QQQ weakest one led the way to the downside. Not much to talk about here. It's the exact same thing as SPY, but it's just a little bit weaker, you know. So same candle, same weakness, same levels. It's going back to March 2021 levels. And it's actually going to December 20 levels. So December of 2020, sorry. So here we go. QQQ rolling over, XLF rolling over. Everything's weak. CPI numbers coming in hot. Fed still tightening. And what that CPI number does is it forces the Fed to do even more than they're doing. So they're already doing 50 basis points at this meeting. They were supposed to do another 50 at the next meeting. Powell said 75's off the table. Now they have 2 choices. With the inflation this hot, if they're really serious about controlling inflation, they have to get either a 25 basis point emergency rate hike, like soon, or they have to do a 75 point rate hike at the next meeting. So expect some news about that in the coming days. CNBC is probably going to be all over Merck markets and turmoil garbage. IWM getting closer and closer to that gap fill that I called like 5 weeks ago. Gap fill all the way down to 165.71, which would be another 5 points down on IWM. It's almost guaranteed at this point. VIX came down actually today. That is the crazy part that you guys have to realize. We got this cup and handle forming on VIX, 36.19 being the cup. Formed the handle, trying to rip up. Today, VIX was actually down 1%. SPY was down 1% as well, 1.6%. So if VIX is down 1% and SPY is down 1.6%, that just shows you the bulls cannot get anything going. That means people are actually taking off their puts on VIX. VIX is SPY puts, right? People that buy SPX puts. Oh my God, bros is going to go insane tomorrow. We'll talk about that in a bit. Charts up here. But what I'm saying on VIX is people are actually taking off their hedges. They're taking off their puts and SPY is still going down. That means there's absolutely no buying, even put covering, and the market is still going down. So that should tell you exactly what's happening in this market. It's very, very weak. There's not much liquidity, and I do expect more downside coming. Pfizer, I did take, so here's the SPX. Let's go over SPX first. I gave you guys levels in the morning. I gave 4100, 4050, 4030, and then 3980, 3960, and 3930 was my bottom level. You can go check in the group if you don't believe me. They're sent out at 8 a.m., guys. We hit the 3960, yesterday's low, and we bounced from there the first time. Oh no, where did we bounce from? Yeah, this is 3960, yesterday's low. We hit it in the morning pre-market, bounced straight up V-shape. Everyone's, oh, who cares about inflation? Everyone's bullish, everyone's jumping in calls. And then they destroyed them. V-shape right back down, straight down in a line. Came, took out that 3960 on the third attempt. Usually when a level is tested 3 times, it gives out on the third attempt. And we bounced from a quite random spot. I mean, 39.40, I never really had anything there. But I mean, Bucky pointed out to me that spot. Gamma said that was the low for the day. So I did reduce some McDonald's and JPM here. I added back into the JPM, but I cut the McDonald's here because McDonald's bounced way harder than the rest of the market. And then just rode the puts all the way down. Sold some more. I sold JPM puts at the end of the day. I didn't want short exposure, especially closing at a key support. Like if I give you guys a top number and a bottom number, I know a lot of people give levels and their levels are just gone all the time. Like they just dump underneath them. But if I give you a top number and a bottom number for the day, and that bottom number is where we close, I would definitely lean towards the upside. I would not expect them to break that support overnight. If they want to break that support, it's probably going to bounce overnight and break it tomorrow during regular trading hours. That's why I took off a lot of my puts there at the end of the day, and I jumped into calls, SPX calls actually. So SPX calls, I took them right here, right at the bottom, 39.30. I mean, I missed the bottom by $1. And right now they are going for $4. I bought them for around $3. And I'm trying to get out a little bit for $4 at the ass. They're not filling me. Let's see. I did take quite a large position. That's why I'm trying to get out right now. I got it on my phone right here. Other than that, PFE, I did take this one short. I'm still holding my PFE short. Why did I take it? First of all, if you scroll out on this chart, there's a massive, massive head and shoulders on the daily. They are trying to hold the neckline as best they can, but once it breaks, I do think we see quality downside all the way down to 44. Why do I say that? If you scroll out to a weekly chart, this is not a one-time frame trade, by the way. Why do I have that line there? Maybe it is a one-time frame trade because that is an awful trend line. But yeah, there's a gap to fill down at 44 on PFE as well. I do not understand why vaccines are so high. I mean, they didn't mandate them anymore. Where's that gap? Right here. So this gap right here on PFE was not fully filled the first time we tried it. So I'm talking about this gap right here. It's all the way down to 44.47. My friend Bucky pointed it out to me. Thank you for that. And I think we're gonna go fill it. If we break this head and shoulders, the small target would be around 44.47. I think it goes much lower, but let's see if we can get 44.47 by next week when our puts expire. And that would give us about 300, 400%. So the risk reward was there for me. And another reason I love this short is because that green line there is the 200-day moving average. We've been trying and failing to take out the 200-day moving average for weeks now. Obviously, we did get above it for 2 days, but then we reversed right back below. Today, big wick on top, meaning profit takers took profit at the 200 and bears slammed the stock at these moving averages as well. So not only did we reject the 200, we rejected the 21-day, and we're underneath the 50-day moving average. Very bearish trend, and let's see if we can get, even if we get a move back to this trend line here, it would put us under 48, which is our strike price. Let's see where that goes. The one thing I liked about, that's why I kept looking for calls today. I really wanted to play calls. The reason being bonds were very strong. As you guys see here, we're in almost a 3-day bounce on bonds now. They tried to take it down with CPI. We just went back to previous low of days and bounced straight from there. So bonds are showing that they're in for a bounce, maybe a few day bounce actually, like a bear market rally as you guys see here. Or they could just stop it at the red line like they did back here. Or they could take it to the yellow, which is the 50 EMA, which would put it at 167. A bounce to 167 on UB would probably bounce the market a lot as well. Other than that, Bitcoin was weak today, so that was a tell. We got that little dip on CPI and then that rip on CPI and then just lower highs all day. Very clear downtrend. Tesla. Tried to catch Tesla a couple times. I really, really wanted to long Tesla. I was talking to Bucky about this actually last night as well. We were charting it. This is the 8-hour chart. I like 8-hour charts a lot. And if you guys notice, it's in a very clear channel. Obviously, the top is not that clear, but if you turn off regular, there, you turned off extended hours, and you see this very clear channel, but we did break to the bottom of it in regular trading hours. And the reason I like the 8-hour chart, you can go back in history on this Tesla. I'm teaching you guys a little secret here. So this is an 8-hour chart on Tesla. You guys see all the arrows I have drawn out. Every single time Tesla gets oversold on the 8-hour. So right here on December 2nd, we had oversold on 8-hour. We got a 3-day bounce. Right here on Tesla, we got a 1-day bounce. Right here we were oversold. We got a 3 or 4-day bounce. This is an 8-hour candles, guys, so you got to remember this is 3-4 days of straight up. That kind of rally pays very well in Tesla calls, so timing this will be great. And you guys see the most recent one right here, the arrow right here on April 26th, and we kind of just chopped. We didn't get that real straight up move that we usually do, but it still ended up much higher. We ended up going from 821 all the way to 955. And if anyone that's played Tesla calls, you know if we get a $130 move, how far it goes. So, okay, so I sold some of that SPX at $4, guys. So far so good. That support is holding. And let's see where we open up at tomorrow, because I think overnight we're going to rip. I think we're going to bounce overnight and then dump again tomorrow. So let's see what happens. JPM, I took the short. Why? Because you guys seen in the morning, JPM was absolutely ripping, guys. So 4-hour chart, we got that rip in the morning. We got the RSI cooled off, and then it came right back down. If you look at it intraday, in the morning it was ripping even while the market was dumping. So if you look at QQQ versus the JPM, QQQ had a little tiny bounce in the morning until about 940, and then we just started making lower lows all the way down, whereas JPM ran all the way for another hour. So 940, here's where QQQ folded and started making new lower lows. Banks actually had another hour of upside. So shorted it, just expecting it to catch up to tech, because one usually catches up to the other. Made a cool 25%, got out because of that SPX 4930 level and switched long. Bros, okay, so here's the trade of the day. We hit Fiverr yesterday. We opened up this morning. One opened up at like, holy shit, they're at $25. Ah, okay, all-time lows on, yep, all-time lows on bros. So congratulations, bros. Whoever caught this play, you're gonna have about 1,000% winner in the morning if it stays down here. I'm sure it does, because they don't have a price to earnings at all, so they are completely screwed. And if anyone likes Bros Coffee, you can buy their stock for 20 bucks tomorrow. Other than that, great play. 200% same day. Plus, we have free runners for earnings, which are going to pay us massively. I mean, even if you kept like 2 or 3 runners, guys, those are $1.31 to $1,000 each contract. That's a account changing move, you know what I mean? And you made it free, so you're risk free. Other than that, let's see where it opens in the morning. Oxy was the one I took calls on. I took some profits in the morning. I am still holding a couple. Reason being, I do think oil has a lot of room to run, but when you get these all-day sell markets, they don't leave anything. They sell everything. They sell oil, they sell banks, they sell commodities, anything you can think of, anything that's even strong, they'll sell it. Like if a company has the best earnings ever, like AMD, next day the market's a full sell day, they don't give a shit about AMD's earnings. They're going to sell it off. And you guys seen that so many times. Airbnb had good earnings, complete sell off. D-Dog had good earnings, complete sell off. The market was weak the next day, the stock sold off. It doesn't matter. So Oxy, we do have 2 weeks. I do expect the market to have some kind of buying within the next 2 weeks. And as soon as it does, Oxy and these oil companies will be the hardest to bounce, in my opinion. Fiverr, absolute banger of a play. I got 600% on one option, 200% on the other option this morning with the free runners. We already had over 100% yesterday. And I got another play just like this tomorrow. I've been reading about it during the day when I was bored. So, and another thing about Fiverr, there's no put strikes under $30. I don't know if they'll add them tomorrow. If there's no put strikes under $30 on Fiverr tomorrow, I will be entering the June $30 puts, because of the reason being they're going to have to add lower strikes. When they have to add lower strikes, they have to short underlying stock to protect themselves. And they, I mean market makers. So keep an eye on 5, or the play's not done yet completely. We may have a gamma squeeze to the downside coming. Here is McDonald's. So I did jump in McDonald's. It looked like it was going to break the 50-day. The market was weak. Apple was dumping. Everything looked like it was selling. 50-day moving average is at 243.82. As you guys see, this little orange dotted line, that's my alert. So this is the only number I care about on McDonald's. If we look like we're closing underneath 243.82, I will jump right back in this short. Did not want to hold it overnight. I just explained to you guys why I don't want too much short exposure overnight. I already have PFE and I still have some bros. So I didn't want to keep all of it. You know, I take pretty large positions. A gap up would have crushed me and I would have taken back a lot of profit. So I cut this one negative 10%, cut JPM plus 25%. So if you guys don't know, that's plus 15% because my position sizing was the same. And that's another thing you guys need to learn. If I cut something negative 10% and I cut something negative 15, positive 15% or 25%, I'm still in the green overall in my account. So that's how you should manage your account. Apple here, just complete destruction today. It looked like some funds. So what happens with hedge funds, I know you guys heard of me talk about it in the group. When hedge funds are in margin calls, they have to sell stocks and stuff that they have that they don't want to sell to cover their losses. And every single hedge fund and ETF in the world owns Apple. So basically, if anyone blows up not the first because it's their favorite, but eventually they will have to sell their Apple holdings to cover some of their losses. It's just like Kathy and Tesla. I don't think she wants to sell Tesla. Actually, I don't know. She's a psychopath and a terrible money manager. But the way Kathy has to do it is to cover some of her losses from her outflows in other stocks. She has to sell Tesla to pay for those margin calls. Other than that, keep an eye on Google, guys. It's my absolute favorite stock in the market. It's the first one I'm going to buy equity in. And you guys see the destruction in the market. You can even look at Apple. Apple's the strongest stock in the market. Apple's this, Apple's that. Apple has bear flagged and broken down. Today it was down $8, and that's 5%. Google has bear flagged, hasn't even taken out 2250 level. It actually closed down 0.69%. 0.69%. That's another reason I'm going to buy equity in this one first. Other than that, I hope you guys had a fantastic day. Tune in tomorrow. We're going to have another 100% play as we've been doing like for the last 2 weeks. I hope you guys made some money, and